In this video, I want to tell you how I have a rainy day fund, also known as an emergency fund, but mine is a little different because it has tax-free dollars in it and it continues to grow tax-free. And I can use that money for anything I need. I could use it for the down payment on a car. I could use it to repair something that goes bad on my house. I could use it if I lost my job. Let me tell you about it. Listen to this guy first. Now, I'm going to point out, anytime you talk about finances, you should understand I am not a professional finance expert. I'm not a personal finance expert. I have no qualifications except just being 56 years old and managing my own money without an accountant or a tax attorney, but I'm none of those things. So please, this is just my personal opinion. What works for me, you need to figure out what works for you. All right, there you go. And you should know that I absolutely am not giving any kind of financial advice. This is all my interpretations about the IRS rules and laws about these things. It is one way to have an emergency fund. Between my wife and I, we have both been covered by a high-deductible health plan for many years. In fact, probably going over 10 years now. We're paying a lower monthly premium. The insured person like ourselves, we have to pay more out of pocket when we go to do our doctor visits or get our prescription medications filled. These health savings accounts, also known as HSAs, they go hand in hand with a high deductible health plan. The health savings account has been around for about 20 years. This was under the George W. Bush presidential administration, and it was part of like a Medicare, Medicaid, prescription medication overhaul. The health savings account is intended to help counter or at least pay for this high deductible. It can get filled with money from our paychecks, tax-free, before taxes are calculated, or you could contribute to it outside of a paycheck, which would of course be after-tax dollars. Most of these accounts are set up at banks or credit unions. And then the idea is that you're putting money into that account. Those banks or credit unions issue some sort of a debit card that you then could just use real time when you're making your prescription medication purchases or you're paying for your doctor visits. However, what I do is I just file that away and try not to use it at all, because there's where the savings comes in. My feeling is if you're going to have an emergency fund, you got to sacrifice at some point in your family budget. There's just no way around it. So either you're skimping on something to try to save the extra money to create that emergency fund. It's a little easier, frankly, when it's forced on you in the form of medical care, because you have to pay those bills. And my feeling is if you don't reimburse yourself or use that debit card from the financial institution where the HSA is set up, you may as well just use your own regular personal credit card as long as you pay it off every month and don't carry a balance over from month to month. But also by using those personal credit cards, most of my credit cards, like the Discover card, has a cash back benefit to it. Same with like a Costco card. The same thing, you get a certain percentage of your purchases given back to you, and it can be anywhere from 2 to 5%. That's a fair amount of money, and if you just put everything into it, well, that's how I've tried to make the best out of those cards. As long as I pay them off every month, they're paying me to basically spend for things I needed to spend for anyway. So every once in a while, you get a $500 or $600 rebate on my credit card, and frankly, that's money out of the blue. But that's another reason why I like using my own credit card for paying for medical care, is because I'm getting that benefit. It's got to get paid one way or the other. And if I don't reimburse myself from the HSA, in a way, I've just started a savings plan. EOBs, explanation of benefits. These come from the insurer to tell you exactly what your share is. And this is the crucial document for like medical visits to a doctor or any kind of actual medical services. Of course, I'm paying the bill from the provider, but I'm holding on to these and I'm putting all my receipts together. And then if I get prescription medications, I'm doing the same thing. I'm going to Walgreens, or I'm going to my local Meijer pharmacy, or I'm using from Express Scripts, and I'm paying them for the prescription medication that I have to pay. But then I keep all of the receipts. I keep the actual prescription slip that shows the dollar amount, the patient, and I keep the credit card receipt or any kind of form of payment if I've got it. Over time, in a year, I just start clipping it all together. That way I've got a complete collection of all my paid medical expenses. It is a pain trying to keep track of all this, because I have multiple years of receipts, and these all represent the amounts that I can now go to my HSA and withdraw money, and I can use that money for anything I need, because I've been paying for my medical care out of pocket with my own credit card or check or cash, making sure I get receipts for everything. And I keep all of my documentation to show in case I ever got audited by the IRS, because if I make a withdrawal from that HSA, there is an official form that says, did you use it for medical expenses? And I will say, yes, I did, but I'm just reimbursing myself many years after the fact. And I would want to keep that proof for that amount. So that's the key to this, is keeping all of this sort of a bookkeeping exercise. Here's my medical expenses from 2017 for $2,768. I don't really see any other way around it, but it literally is a pack of receipts like these, all my medical receipts, and I've kept them in an envelope and I've labeled them. Here's another one from 2018. What, $6,003.40 of medical expenses that I paid, but they're valid expenses. But you can see how this is adding up already. So right there, between those two, this is what, $8,000, almost $9,000 worth of emergency fund money sitting in these two packs. That's how I look at it. Or 1,000, 2,000, 4,000, 4,900. Between all of these, we're looking at, this is probably close to worth of medical expenses. But again, it's because it's so many years worth. Instead of having a regular emergency fund that you would put into like a savings account or a CD that's not in the HSA account, regular money would be earning interest or a yield of sorts that you then have to pay taxes on that. This money is earning interest and I'm not paying any taxes on that earnings of that. So I didn't pay any taxes for the money that went into that HSA account, and I didn't pay any taxes on the money that HSA money is earning. To me, that makes a perfect emergency fund, because the goal is you don't want to use it. I can just keep holding on to these year over year. The more money we put in, the more it grows. That HSA fund gets bigger and bigger, and it can be used for anything as long as I've got the proof of the medical receipts. Now again, this is how I've interpreted it. I think I'm right, and I've read it over and over, and I don't think I'm wrong, because when I do my income taxes, they basically say, if you take money out of an HSA, they want to know, was it for valid medical expenses in the eyes of the IRS? And they have a whole list of what do they consider qualified medical expenses. Even things for mental health, those are covered. At least they are now. And again, these rules change year over year. Unfortunately, you do have to go to the IRS and read their notices that they put out every year. I just do it when I do my taxes. I kind of give a glance through any of that stuff to make sure things are still as I understood them to be. And as I say, this is going to continue to grow tax-free. Now, I will put that money into something very safe. I could open up an account that has equities or stocks and mutual funds and try to make a much bigger gain on that. But you could also lose an amount too. And frankly, when it comes to emergency or rainy day money, I don't ever want to put that money at risk. I need to know I can get to it when I need to get to it. So I would never put it into equities or stocks. Frankly, with the way interest rates are right now with this inflationary period, CD rates are also going up. So I can get a almost nearly 5% CD, and I take advantage of those, and I just sort of spread that money across many CDs. That way I don't have it all locked into one, but I can always know that maybe every month or two I'm going to have a CD that comes due. I want to keep it fairly, as they call, liquid, which means I need to be able to get to it when I need to get to it. I've got my receipts ready to go if I ever needed to take money out. My plan is if I ever take money out of those, I'll say, well, I'll take out either the exact amount for a particular year, take those receipts, put them with my income taxes that year that I did that withdrawal, and that way I've got proof in case I ever do get audited by the IRS. I'll say those were valid medical expenses and I've got the proof for it. That money comes out tax-free. Trying to find a way to scratch up money beyond what you're already spending right now is very difficult, but this system does seem to work for me. When I first had my first job, I remember many of my coworkers liked having a lot taken out for income taxes, knowing they were going to get a big tax return at the end, because it was the only way they could force themselves to save money. I personally try not to do that because I don't like to give Uncle Sam free money that they can use interest-free, but I kind of get the idea. This is sort of the same concept. You're basically paying for your medical care and your prescription medications up front, knowing that you're paying it out of pocket. Your insurance doesn't kick in until you satisfy your high deductible. As long as you don't reimburse yourself and leave that money in the HSA, continuing to earn interest-free, in a way, this is a forced savings plan. Let's try to get through this together and do the best we can. Take care. Thanks. We'll see you in the other videos.